APRA's crisis management powers have been strengthened as part of a raft of legislation said to improve Australia's financial system. On 14th of February 2018, the Financial Sector Legislation Amendment, Crisis Resolution Powers and Other Measures Bill 2017, was passed by the Senate. Based on a recommendation from the Financial System Inquiry, the bill provides clear powers that enable APRA to set requirements on resolution planning and ensure banks and insurers are better prepared for a crisis, and an expanded set of crisis powers that equip APRA to facilitate the resolution of a distressed bank or insurer. Treasurer Scott Morrison said the international experience during the GFC showed that regulators need powerful, flexible, and timely tools to resolve financial institutions in distress. He added that the prudent time to strengthen powers was when the system was healthy. The Banking Executive Accountability Regime, or BEAR, passed the Senate. It is due to come into force from 1st of July 2018 for large authorised deposit institutions, or ADIs. BEAR stipulates when obligations aren't met, APRA can impose large fines on individual executives and/or disqualify them. It will also ensure remuneration policies result in financial consequences for individuals. Treasurer Scott Morrison said banks will be required to register their senior executives and directors with APRA and provide greater clarity regarding their responsibilities. For small to medium ADIs, BEAR comes into effect from 1st of July 2019 to give them time to comply because they lack the operational resources of their large counterparts. Assessments of customers' abilities to repay their credit limits are to be mandatory for credit card providers from July 2018. The Treasury Laws Amendment Banking Measures No. 1 2017 Bill passed Parliament on the 15th of February 2018 and brought several other reforms. For example, from January 2019, unsolicited offers to increase credit limits are banned, credit card interest calculations will be simplified, and credit card providers must provide an online option to cancel cards or reduce limits. The bill also loosens regulations so any ADI can call itself a bank. It's a bid to improve competition by enticing new lenders and challengers to enter the market. In addition to other legislation passed on 14th of February, this bill strengthens APRA by giving it a reserve power over non-banks' lending activities. Jerome J. Powell was sworn in as the 16th chair of the US Federal Reserve System on the 5th of February 2018. Powell, who has taken office on a 4-year term, is also a chair of the Fed's principal monetary policy-making body, the Federal Open Market Committee. In a speech at his swearing-in ceremony, he said the Fed would gradually normalise interest rates. Inflation and unemployment in the US are currently at near-record lows. The US Bureau of Labor Statistics reported the Consumer Price Index increased 0.5% in January. Consumers allege some of Australia's financial services providers have acted on false documents and provided inappropriate financial advice. The allegations were heard by the Royal Commission into Misconduct in the Banking, Superannuation and Financial Services industry during its opening on the 12th of February. Commissioner Kenneth Hayne QC said in many cases it had been established there had been misconduct or conduct falling short of community standards and expectations. The first round of hearings will commence in approximately 1 month's time and will likely focus on credit products such as home loans, car loans, and credit cards. A new payments infrastructure that allows the instantaneous transfer of funds between banks, building societies, and credit unions began its public rollout on the 13th of February 2018. Originally expected to hit the market in October, the new payments platform, or NPP, is being keenly watched by overseas institutions as it features a layered architecture that can support multiple and competitive services, significant data capability, an addressing service called Pay ID that enables payments to be made to memorable identifiers rather than BSB and account numbers, and real-time settlement via the RBA's Fast Settlement Service. Australian Bankers Association Chief Executive Anna Bligh said, This is the biggest thing to happen in the industry since the inception of internet banking 10 years ago. NPP Australia Chief Executive Adrian Loveney said most of the 60-plus financial intermediaries rolling out the instantaneous payments on the platform will use an overlay service called OSCO, developed by BPay, which in turn is owned by the Big Four banks. Vertically integrated firms were failing to properly manage conflicts of interest in financial advice, according to ASIC's report 562. Called Financial Advice, Vertically Integrated Institutions and Conflicts of Interest. The regulator found that 75% of advice did not demonstrate compliance with the duty to act in the best interests of their clients, and 10% of the advice was likely to leave the customer in a significantly worse financial position. The review looked at the products that ANZ, CBA, NAB, Westpac, and AMP, financial advice licensees, were recommending, and at the quality of the advice provided on in-house products between 2015 and 2017. Acting ASIC Chair Peter Kell said that ASIC was already working with major financial institutions to address the issues that have been identified in the report.